Hey guys, I'm the Newb investor. Today we'll be looking at the 5 biggest restaurant companies in the US today by market cap. McDonald's, Starbucks, Chipotle, Yum, who owns Taco Bell, KFC, and Pizza Hut, and restaurant brands, who owns Burger King, Popeyes, and Tim Hortons. We'll be screening them using my 3 metrics. Let's go on with the video. My first metric, I want them to have an EPS multiple of less than 3 because otherwise we'd be overpaying. We can see here that Starbucks, Yum, and RBI are trading at high multiples. For now, we're not going to invest in them. Rather, put them on the sidelines and wait for their EPS to catch up with the PE. How can they do this? They have to buy back some shares. So, we'll only be focusing on McDonald's and Chipotle's right now. My second metric, we want to pay $1 or less for 1% of the money they're making. In this table, you'll see the revenue they made in the last 5 years. Both have increasing revenues. Chipotle spends a lot in COGS and OPEX, around 90% of the total revenue, compared to McDonald's at around only 60%. McDonald's makes more money relative to their revenue at an average of 27% in 5 years. In 2021, it's around 30%, while Chipotle makes only a little less than 10% of what they're making. If we take the lowest average they made and divide it by the current PE, we can say that McDonald's is trading around fair value, while Chipotle trades at 12 times what they're making relative to their revenue. On to the next metric. My third metric is historical PE. We want to see how the markets value these companies years before. In the table, you'll see the number of quarters I took the PE from. We'd see the lows and highs for both companies. We can see that Chipotle's PE is overcompensating for the little money they're making, hence the stable and high PE over the years. But honestly, we don't want those. We want them to be trading around fair values. On the bottom part, we'd see that both stock trades around the historical PE. To conclude, it's fair to pay premium for McDonald's because they make more money relative to their revenues. McDonald's is the better buy because it is trading around its fair value. What I'd buy is McDonald's over Chipotle because of the 3 metrics. McDonald's made more sense. I'd be buying McDonald's at this PE with the highest of 24. But if you want to buy it at discount, buy at lower PEs like 16 to 18 PEs. For Chipotle, I'd be buying around these PEs. And take note, this is 3 times their free cash flow relative to revenue, which is still be overpaying, but the market seems to be okay with Chipotle's high PE. If you want to invest in these companies, I'd advise you to look for higher time frame, like 10 years of data. Look at the other metrics as well, like long-term debt, current ratio, and other metrics. These metrics I use are merely screeners to see what stocks are better buy than the others. As usual, do your own research.